My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. One of the challenges I have with using continuation charts as I do, that every so often you get some really big changeover gaps that wrecks all the careful trend lines, pitchforks and notations that I've written. Recently it had been Paris rapeseed futures, which was a great story in itself. This time here it was Paris European milling wheat futures back in early March. Admittedly, just before the huge change gap we had a bearish engulfing pattern, but I would be a fool to directly link those two together. The current situation here is that prices have halted their gentle decline at the previously highlighted congestion from March to June, from the bullish March to June diamond pattern from last year, between about 183 even and 192 even. There was a daily key reversal up Wednesday last week and an attempted weekly key reversal up as well. However, that ended up with the lesser outside week instead. Nevertheless, since that result, prices have tried to recover, with Wednesday this week having what looks like either a small tweezer bottom or an attempt at a bullish harami. Prices now running up into the first two overhead resistances. These are the 50% Fibonacci lines of the big old 2009 to 2021 move at 200 even, and the September 2019 to January 2021 move 20075. Beyond that, we have the long moving average, currently 202 3/4. Though I am unsure about the power of that one right now. London UK feed wheat. This contract was unique in all the markets I look at. It was the only contract that I had a monthly key reversal in March. In this case it was a monthly key reversal down, and a good looking one as well. This was not an unanticipated move, as any who have read my weekly market commentaries on grains will no doubt be aware. I spotted the potential for such a monthly key reversal down back in the middle of March, when prices dropped below the very recent 50% Fibonacci line at 20045, as well as the then gently rising, now flatlining, medium moving average currently at 199.85. Now some enterprising fellows tried to halt the move lower with a big combined key reversal up and bullish closing white Maribozo on Wednesday last week. However, a daily pattern does not usually trump a weekly or a monthly pattern, and we were also testing the lows for this year as well. So you can imagine they all look pretty bleak for UK feed wheat futures. Well, at this point, as I pointed out in my midweek ADM-IS and ADM-ISI video, let me throw a spanner in the works and remind you all, dear listeners, that real life is much more complicated than that. A little below the key reversal last week, we have the 50% Fibonacci line of the whole big August 2020 to January 2021 move at 187.40. Then a little below that, and we have a seeming concrete wall emerging. It is the combination of the rising long moving average, currently 187.45, and the April 2020 to date uptrend, currently 187.20. These last two have been inseparable since mid-March, just about the time we had the cue for that monthly key reversal down. Now, you can see why I find this smaller contract all the more interesting, as it is bringing big forces to bear technically, resulting in some interesting actions and moves as a consequence. I'll now talk about the one bearish factor that is still there, even today. The bearish January to March Andrews pitchfork, which has been giving the bearish angle of attack of this market. Now, the market was stopped from testing the lower time, currently at 183.20, by the bullish forces of the uptrend and long moving average combination previously mentioned. Instead, the market did some action around the middle time last week, and this week as well. That's currently at 190.20, including a combined key reversal up plus bullish engulfing pattern and a bullish open and close white Mariposa, all on the same day. That was on Wednesday. Yesterday we had another bullish open and close white Mariposa. Then there came today, gapping higher move and an attack directly at the upper time, currently 197.20, puncturing it but ending the day with a bearish gravestone doji, a little underneath the overhead flatlining medium moving average, currently 199.85, and the recent 50% Fibonacci line at 200.45 already mentioned. Next will be interesting, as it looks like the bearish Andrews pitfall has held for now. Be interesting to see what happens. European processing potatoes. Just before the Easter break, the market was trying to push down through the important April 2020 to date uptrend, currently at 7.500. In doing this, prices started running into the congestion below from the July 2020 to November 2020 move. The issue of this support, as I mentioned last time, is that on the surface it may look competent, but it has no clear defined support levels within this band, bar the lesser Fibonacci level at 6.600 and the December 2017 low at 5.600. I wrote 2 weeks ago, and I quote, "I'm not sure how well the market will cope with a determined assault lower," end of quote. I echoed what I had written there 4 weeks beforehand, and I quote here, "I have suspicions that we have not seen the last of the current bearishness. Below we have the 50% Fibonacci line of the April 2020 to February 2021 move at 7.900, and then the April 2020 today uptrend," end of quote. However, we also have a load of gaps below and around here, and they might want filling, so I advise caution. Well, last week was indecisive, to say the least, but by the end the market had gathered enough confidence to attempt a move higher. It was only Wednesday, clear close over the long moving average, currently at 8.300, that finally saw a decent starting recovery. However, though today was higher still, I suspect we may be seeing a possible failure. The reason is that prices stalled and ended the day just under both the overhead medium moving average, currently at 9.700, and the old lower trend line, currently also at 9.700, of the February to March base falling wedge pattern. Now this pattern prompted the move lower from the February highs. I will be very interested to see how early next week's action shows against this background. Thank you for listening. This weekly broadcast gives the essential elements and patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZE Tofpik and ADM Investor Services International Limited. And here comes the final bit.